Welcome to another video. Today we will be making a multi-time frame analysis on a pair. So we will be analyzing it from a technical perspective and then from a fundamental perspective by checking the COT data, so the commitment of traders, what big banks and institutions are doing at the moment on a specific currency, and that obviously will help us gain an edge over our competitors in the market. So first, looking at the pair from a technical perspective, then fundamental perspective, and I will be sharing with all of you how we can be capitalizing on it. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis daily. So I suggest you subscribe and I will see you in the video. Okay, so today I want to speak about GBP JPY because I believe it's a very interesting pair to be following for a possible capitalizing opportunity on it. As usual, I will keep the analysis as educational as possible, so during the analysis I will be teaching you many concepts. So let's start from the weekly time frame, then we will go and see what we have from a COT perspective, so commitment of traders, what big banks and institutions are doing in the market, and then I will show you how we can be looking for a possible capitalizing opportunity on GBP JPY. So let's start from the weekly time frame. What kind of situation do we have on the weekly? Now on the weekly, clearly we have a market that has created a strong impulse to the downside, followed by a nice retracement. Now after the retracement, if you remember, we had made an analysis in which I said to all of you, expect the market to make continuation to the downside. And in fact, that is exactly what the market has done. It has started to make the new move to the downside. In fact, with students, we were able to capitalize on the move to the downside. And by the way, I will link that analysis in description, so you can go and check it out, because obviously it's educational and you will see what we were looking at and how we were able to capitalize on the move to the downside. Now, after that, what the market did, the market made the move to the downside and then basically started a new impulse to the upside, creating a higher high, so creating this very major weekly W formation. Now after a W formation, in general, what do you expect? You expect the market to make a move back to the neckline. So from a weekly perspective, immediately we can realize that definitely there are very good probabilities that the market will make a nice wave to the downside and we can be looking to capitalize on the move. Obviously, this is just the start of the analysis, but it's already clear that we have an opportunity to be looking for potential shorts from a GBP JPY perspective if we look at the weekly time frame. Now, what we can also notice is that we have clear structure at this area. In fact, we have this previous support here from a weekly perspective now turned resistance at this area. And from here, we definitely want to see the market make a move to the downside, but at the same time, you also have to realize another thing. This is not the only structure level that you have in this move to the upside. You also have another structure here. In fact, you have this previous support here, against support here, which is turned resistance at this zone. So actually, the supply area here for GBP JPY is not only this move, this area here, but it is all this structured zone here. And we definitely would like to see the market make a spike inside of the area, a squeeze inside of the area to grab the liquidity before starting the move to the downside. And remember, the more the market goes up, the better risk to reward we will have when we will find the opportunity to take a short position on the pair. So from a weekly perspective, we have our resistance zone, we have our pattern. We knew that we want to see the market make a shift to the downside. Perfect. Let's go and see what we have from a COT perspective. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So commitment of traders, what big banks and institutions are currently doing in the market. So if we go and see what we have from a pound point of view, what we can see. Now, from a pound perspective, we can see that hedge funds shifted completely their positioning. In fact, we went from a situation where we had way more longs than shorts from an institutional perspective on the pound to having way more shorts than longs. And as you can see, in fact, at the moment, we have 63K shorts and 26K longs, the largest number of longs that we had in a very long time, and the smallest amount of longs that we had in a quite long time. So very, very little longs and a huge amount of shorts. So overall, what we can also see with the last report is that they have added another 1.5K shorts and close 12K longs. What does it mean? It means that during this move to the upside, they have been closing their longs. Now, if during a move to the upside, you see the biggest speculators in the market closing their longs, what does it mean? It means that it's just a matter of time before they move to the downside actually starts. Okay. So let's go and see what we have from a JPY perspective. Now, if we go and see what we have from a JPY perspective, we can see that we went from minus 56K all the way up to 32K. So again, complete shift. We went from having way more shorts than longs to having way more longs than shorts, with 61K longs at the moment and 29K shorts. Now, 61K longs is the biggest number that we had in a very, very long time on the JPY. So definitely strong JPY, weak GBP is just a matter about giving to hedge funds the possibility to load up proper shorts inside of this area, because yes, they have closed the longs on the pound during the move to the upside, but they haven't still added proper shorts, and that is why a clear distribution area here would be great to lead to the move to the downside. Now here on the daily time frame, what we have from a daily perspective, the market has created a perfect impulse to the upside, without showing any sign of weakness. But this market is clearly overextended to the upside from a daily perspective. Why? Because the market is supposed to move in waves. However, here we have only one move to the upside without any proper retracement. So we can definitely expect the move to the downside and completion of the W formation. Now, if we go and see what we have from a 4-hour perspective, what we can see, everything is still bullish, okay? Everything. The market has just been creating higher highs, higher lows without showing any sign of weakness. So what does it mean? It means that we still have to see the proper distribution that we were speaking about, the clear deceleration before the move to the downside. So the clear shift from a 4-hour perspective from a bullish market to a bearish market. And that is actually quite good, because it means that we could definitely continue to the upside to go and test the liquidity inside of that zone, because we did test the low of that zone, but we didn't really test the liquidity inside of the area, which would be the best thing, because it would also increase our risk to reward to the downside, the amount of pips that we can be catching in the move to the downside. So the way in which we will be approaching this situation is, as usual, from a reactive perspective and not predictive. Why? Because you can't predict the market, but what you can predict and what you can know is how you will be approaching the market. So which are your clear rules when it comes to direction, when it comes to entry, when it comes to risk management. And that is exactly what we will be doing with students. We will be waiting for price action from a 4-hour perspective to shift from a bullish market to a bearish market inside of this area. So waiting for the market to show clear sign of weakness, and only then we will start to monitor this pair, and we will start to wait on the 4-hour time frame for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries after shifting to a bearish market, then we will be taking a nice short, because at that point we will have great risk to reward to the downside, great probabilities for the market to actually complete the pattern at the neckline, and we will definitely try to ride this wave to the downside. And always remember, guys, try to take trades with a minimum 1 to 3 risk to reward, because that is how you can be sure that in the long term you will always be profitable, because you have very high risk to reward. And even if you have a relatively low win rate because your strategy is not performing well for a certain period of time, you will anyway be making money. That is one of the key aspects when it comes to trading: rule-based strategy and having high risk to reward setups. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. You will first learn all the rules of my strategies and then trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every question that you have each and every day. So it's a very complete program. I suggest you go and check it out. The link is in the description, or I will see you in the next video.